Welcome back to another episode of Investing Explained. Here's today's question.
I am obviously interested in the valuation metrics, but I am not putting on any position unless it has a positive momentum trend with it. Simply because I think that what we're experiencing is something that is very rare. And when I say very rare, like this isn't your typical business cycle like we've seen in the past. I think this is something that's way different and going to be way more difficult to navigate successfully. And so let me just expound on that. Do I think it's possible for the stock market to make a new all-time high right now? I do. I think that could happen. Do I think that we could see a 1929 type chart where it just progressively goes down after it gets bid 40%, but overall the market keeps trending lower? I absolutely think that could happen. So for somebody who hears that, they're saying, well, you're basically saying it could go anywhere. And you're right. That is what I am saying. I think the array of potential outcomes on the stock market is so wide that it'll blow people's socks off. Because what you're seeing is total market manipulation. And not just in the US, you're seeing it globally. These central bankers are doing things that we have never seen in our entire lives. And as a result, I have no idea which direction it's going to go. So that's why I think momentum is such an important part of the investing approach these days, because it's completely based on price action. It's looking at what was the statistical volatility in the past? When has it stepped outside of that statistical volatility? And if it did, it's red. And that's a sell. And I know that sounds really simple. Preston, so you're not even considering 10Ks and 10Qs anymore? No, that's not what I'm saying. All I'm saying is that if I do buy something, I'm trying to not only find something that has great value characteristics, but something that also is in a positive momentum status so that I can protect my downside risk. That's it. I have no idea whether we're going to see a stock market hyperinflate like we saw in, call it Venezuela. Go back, pull up any chart of a stock market during a hyperinflation scenario, and guess what? The stock market goes up. It just keeps on running, and it runs in a parabolic way. In the US, I think that could happen. I also think that we could see some type of deflationary spiral in prices. I don't know, because so much of it depends on government intervention. It also depends on some random technological solution maybe stepping in and redefining what money is. There's so many different outcomes, and we have no idea what those are going to be. But if I'm using some type of momentum strategy, it's going to protect my downside risk. I do know that if the market goes lower. And it's also going to help me step back into the market if it's going to run higher. So I think the best thing for people to do at this point is to have a very open mind, extremely, extremely open mind as to the possibilities of what's coming next. And then use sound principles. In my opinion, the most sound principles out there is a value investing approach mixed with momentum strategies. And yeah, that's exactly how I'm doing it personally. And I know this is a very biased opinion, but I think somebody who does not have exposure to Bitcoin, I think that's absolutely crazy if you don't have some type of exposure to it. And if you're scared about the volatility, minimize your risk by position size. Have a 1% position. And if you're wrong, well, then you lost 1% of your portfolio. Congratulations, right? But if this is right and you have 1% exposure, it could potentially cover the other 99% of your investment. So I think that it's important and I'm not telling people that they need to invest in it. I think what people need to do is they need to educate themselves on what it is and what it isn't. And the only way you can do that is going out there and reading a ton of books. But that's the only way you're going to get comfortable. And if you're concerned, adjust your risk through position size is my recommendation. So Stig, I know that was really long. I'm sorry, but I was quite animated and excited about responding to that question. Let's hear what you got.
I think you need to use both, especially in times like these where I wouldn't say that value is out of style. I would just rather say that value is just manipulated. And so much of that comes from that initial manipulation. Some of that is difficult to cope with because, for instance, something like quantitative easing that's completely messing up the market. Whenever you're taking away quantitative easing, even though it might not supposed to be there in the first place, it is sort of like tightening. And so it's just very, very difficult environment to maneuver in. But I think it is still important to revert back to value, especially in volatile markets like this, because you might be tricked into thinking that companies can change the fundamental value 10% almost on a daily basis. And the intrinsic value of companies just moves much slower than that. And even though you have definitely seen significant changes in the intrinsic value of some companies because of COVID-19, it's still a very sound principle to go back to. At the end of the day, buying and holding great companies, at least to me, I don't think that will go out of business. It might just be a more difficult time to do that than a long time because the market just gives you very different signals than it used to. And if you're completely blank of what you should invest in, something like Vanguard's World Market ETF, the stock ticker is VT, the expense ratio is 8 basis points, and you have a great diversification if you do that. The momentum of that is still red, so perhaps now is not the time to go into it. And it actually did turn red at February 26th, whenever the US stock market did that too. Obviously, the US stock market also has half of the global market cap, and it would still be a good call for you if you had made that at that time. So the indicator still tells you to sit on your hands, but that might be a way to do it if you're very unsure when is the momentum going to change. I don't really have too much of an opinion on individual stocks. You might consider something like that specific world market ETF that's just very cheap to buy into.
Stig, I would say people just need to be prepared for being whipsawed all over the place. Would you agree with that?
Yeah, I never know where the stock market is going, but right now it's a very tricky time that we're in because there are so many who has such a huge incentive in terms of manipulating the markets. And I know that the future has always been difficult to predict, and this time is no different. And I've talked a lot about history before. At least the last 100 years, I don't know whenever the market has been as manipulated as it has been right now. You're just talking about 1929. And again, I'm not saying it's going to be anything like 1929, like you also mentioned before, but I think it's important to say we just have a very different system. Like this system couldn't be manipulated the same way in 1929 because the system was not set up to be manipulated the way it is today. And that manipulation is good for some reason, but it's also bad for other reasons. For instance, like I mentioned before, the Fed couldn't go in and support the banks. So it was raw capitalism. And I can't help but say, we talked about Berkshire Hathaway, and again, we'll talk more about that later, but Warren Buffett right now, he's been punished for being a capitalist. It's sort of interesting. He's been sitting waiting for that phone call when people need cash. And that's whenever a true capitalist would make money. But guess what? He gets no deals because they get free money from the Fed. And so that sound principle that he was relying on, that with credit freezes, whenever we face a huge crisis, that's the time that I will make great returns. I can easily understand if Buffett has been thinking that. That's also what happened in 2008. And what's happening now? Well, the Fed printed trillions of dollars, and now it's just a different ballgame. That's it. Preston and I will continue explaining investing, so go ahead and hit that subscribe button.